This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Berthold Baurek-Karlic, managing partner at Venionaire Capital. Venionaire Capital is an independent private equity and venture capital firm which offers a wide range of services in a variety of tech-related sectors and industries. Since its foundation in 2012, the company successfully advised more than 50 startups and closed transactions with an overall volume of about 350 million euros. Throughout the past years, Venionaire Capital made early-stage leads and co-investments and managed to build a strong portfolio of holdings. Berthold, thank you for joining us.
My pleasure. Great. Thanks for having me.
Great. So what was your background before investing in early-stage companies? What did you do before this?
Well, I actually started my first business when I was 17. Quite untypical for an Austrian. Usually, there's I would say less ambition to become an entrepreneur. And I somehow had this in my DNA. Sold the company when I was 19. This was basically an event company. Worked for the central bank in Austria then while I was in university. Studied management science, a mix between mathematics and economics. And then went into investment banking. And I would say in the good times still, when I started, made a quite fast career, started investing in startups besides, and then fell back into becoming a founder again, co-founded a tech company, then an IoT company, and roughly 9 years ago, decided to fully jump on the side of investing with my own company, Venionaire Capital.
Great. So what excites you right now?
That's a difficult question. I think overall, of course, we see that, and especially with this boost also the pandemic gave, that software is eating the world. The tech is moving even faster today. We see a lot of players from different industries tapping into markets they haven't been in before. I mean, obvious examples are a Tesla being founded by Elon Musk, who was actually in software before. And you see a lot of examples like this in multiple industries. We see now fintechs that are focused on financial well-being, so kind of like a fitness tracker or a wellness company to enable people to save more money instead of using their credit cards and overspend what they have. So there's a lot of those fields that are interesting. And I mean, what I've learned in my years in the venture industry is that you should be focused on a topic where you really know best what you're doing. And this is RegTech, so regulatory technologies, fintech, and big data analytics, AI for myself. So this is my core topic. I have other partners in the firm focused on digital health and industrial related solutions. So I would say, speaking for my end, right now there's very interesting movement around the whole blockchain, Bitcoin hype and pump that we see, the current wave. RegTechs in this space are, I think, even more interesting than all the brokers and all the solutions that you find out there. I think this is pretty obvious because there will be taxation, there will be stricter regulations on anti-money laundering, anti-terrorism financing, etc. There's a lot of funny business still going on in the crypto world, is at least what Christine Lagarde said from the European Central Bank. And I believe also in the US, you had similar voices in the media. So this calls for additional regulation. Also in banking, we see this. And we're actually invested in two quite strong companies in this field. And I would say developments here are extremely promising.
Great. We're looking forward to seeing what comes from these new moves, and they look exciting as well to me. So let's talk about your advice for startups and investors. You deal with a lot with both of them. What's your advice for people investing in startups? What do you tell them to do before they write that check?
I think there's a huge difference between what we see in the US, a much more developed startup market, than with what we see in Europe. Europe is, I would say, not not developed at the same pace in all the different hubs. We see, of course, the very hyped regions like London, Berlin, but there's also other hubs that are seeing unicorns lately. Like Austria just had Bitpanda, a crypto broker, becoming the first ever unicorn of Austria, a company where Peter Thiel is invested, and a number of other, I would say, highly recognized investors today. We have seen activity for more international investors than ever in Europe, and I think this is because there's additional alpha in the market. So, like even the large funds like Sequoia have an office now in London. There's, but also the smaller ones. We've seen Tim Draper investing in Morpher, another blockchain-based company here in Austria, and also from Asian side of the market, there's investors coming in. We've even seen Mubdala Capital, from the Sovereign Wealth Fund of Abu Dhabi, with their office in London being super active in early stage suddenly in Europe. So what would be my advice? My advice would be look for alpha where you can still get it. There's a lot of markets that, because of hype and because of the supply and demand ratio between good, strong companies and the capital available in the markets, it's harder to find the right companies and to eventually invest at a fair valuation and to have a good chance of returning a fair stake in investing in this. And obviously, you're in investing in startups because you want to return more than what you invested, right? And you want to do great in that. So my advice would be, search for alpha. Be prepared to say no. We see roughly 2,500 companies a year as a group, and we do make investments of roughly 10 to 15 maybe in a year. Yeah. So we say very often we say no. We try to say no as friendly and as polite as we can. We try to open doors to other investors, make intros, give a little advice, and try to be supportive.
Well, that's good advice for the investor. So on the other side of that table, what's your advice for the startup? What do you tell them to do before they go out to raise funding?
I think for startups, right now, and I think this is at least a development that I've monitored here. I think startups today are much better prepared than we were in the early days of these ecosystems starting at least in Europe. I'm not sure if you see this the same in the US. So now startups actually know which valuation methods, they know how to argue and to negotiate their term sheets. They have templates, there's the British Venture Capital Association standards. You have the similar for different other countries in Europe. Pretty much every startup region has put out templates for standard contracts, etc. So they're quite well prepared. And so for a startup founder who's a rookie in the game, I would give the advice to prepare as well as you can, because your competition is likely to be really good prepared. There is a hunt among startups for the best investors, right? Obviously there's Forbes Midas list for the 100 best investors on earth, but there's thousands of other investors out there. And some of those might be a great fit for you. Some of them might just be money, right? And even though if everybody says it's smart money, etc., we all know it takes a little bit more than just writing a check. So I would say as a startup advice, really look for the right investor for you. Prepare yourself so that you can actually win in your competition among peers. And lay out a plan, a big vision, and then take one step after the other, and don't make yourself crazy because of news of other things that you see around you. As an entrepreneur, you just need to follow your path, and you need to be ready to fall down and stand up again.
Well, that's good advice. So let's talk about the state of investing in startups. How do you see the industry evolving from here? We're coming out of COVID, various stages of reopening. What do you think where is it going to go from here?
I think a lot of industries have had probably more wind in their sails than they had before. Due to COVID. So if we think of everything that supports us in remote working, distributed teams, etc., I think some of the developments have come to stay. So I'm not sure if all companies will return back to office. I see more and more international companies being now more open to work with distributed teams globally. I just learned that 5 really good developers from just around here, from this block, got hired by an American firm, and this wasn't possible a couple of years ago, and now suddenly it's the new normal. So I think there's some developments that we have to keep an eye on, and some markets where it might be more challenging if you start now and where maybe timing is not right yet or not anymore. Some other industries, I think, open a chance. So anything like in travels, hospitality, etc. These industries were hit quite heavily. We see a lot of talent that has been laid off, as sadly as that is. Looking back at the financial crisis, when subprime and all that hit the markets, we have seen a lot of financial experts being released to the market, and then fintechs started to rise, right? So maybe there's an opportunity in this little disaster that we see in this travel industry, and if I would be looking for a new venture, I'd probably try to get a macro understanding where I can get the best talent available, and where I find a niche where maybe there is economic trouble and there is room for change, or maybe a desperate need and call for change.
Great. Well, let's talk about your investment thesis and what you look for. What is the thesis, and what's your criteria for funding startups?
It's actually a quite simple strategy. We always look for the shovel in the gold rush. So what that means is, for example, we looked at the fintech space and realized we're too late. And we felt, okay, fintech is a little bit like a vitamin. If the large banks decide that they want to be more techy, then they would throw billions at the space. And it might be hard to, be one of the winners in this space. If you have been one of the first challenger banks, you obviously had timing right, and you came to stay. So you will make your exit. But what we saw is that regulations are picking up, and regulatory solutions were not out there. Incumbents just did not see what's coming and didn't prepare for dynamic data. They didn't prepare for KYC on chain. They did not set up structures to, do fraud prevention, AI-based, etc. And in this field, for example, we see this shovel of a gold rush. We see that there is a desperate need. There is super high fines. Banks have to pay if they're not compliant. So this is actually a field where they seek a painkiller, and they're willing to pay really high rates for solutions that help them. And we think in this space, this strategy actually fit quite well. Another topic, different field, a company one of my partners covers in the microbiome space. So in your gut, the bacteria, the microbiome is basically, as we know today in medicine, is one of the key sources that we still try to understand for our well-being. We try to analyze this bacteria and find out in how we can do precision medicine. And everything was hyped around precision medicine and everything. We looked at this space and a very smart professor came to us after a panel discussion and said, "Guys, you said shovel in the gold rush. I've heard only precision medicine today. Is anybody doing precision diagnostics? Have you ever heard that?" Right? So, how can you do precision medicine if you can't do precision diagnostics? Why not check if a certain medication for a cancer patient would actually work on this cancer patient? And this is actually what a company we invested in does. They're about to become the world's first medical diagnosis bioinformatics software. So they can be used then for immune therapy and colorectal cancer and some other indications. Company's name is BiomeDX. If you want to look it up, it's bio-dx.com. And the main lifestyle product is pretty similar to what Biome does. The big difference of My Bioma, that's their lifestyle product, is that they took the data of the healthy patients as a control group for actually a medical product that they wanted to develop. Yeah. Sorry, I don't want to be too long for answering.
No, it's a great example.
I can go on forever in those topics.
No, I understand very clearly the thesis, and I think it's great. And the gold rush is those who sell the picks, shovels, and Levi's are the ones that make all the money and or consistent money. And so this seems like a similar strategy to it. So let's talk about
Correct.
the challenges for the startup and the investor. When you work with these companies, what are the challenges you find most of your startups struggle with?
This again, I think, is something that is different in Europe. We have so many different countries with different legal systems, different languages, smaller markets. So not one unified market like like North America, right? Where you have one language, one legal system, pretty much, right? And where you can scale in a gigantic home market. So what we see is that our companies have to scale into other markets really fast. And they have to be much more flexible to do so. A second thing is there is less capital available, venture capital in the markets. There is higher public grants to kick off in the very early start. And so if technology transformation, out of universities and stuff like that, this is sometimes really well supported by governments. But then, business angels, early stage investment would work. Scale capital is rare. Right. So then you have to be among the best of the best of the best to really have a chance, and you have to attract international investors. You won't find too many local investors that can give you a 10 to 15 million round. Yeah. So it pretty much is a dead end, and anywhere above 5 million, you could pretty much say. Right. Then you start syndicating, etc. And funny enough, very large rounds pre-IPO, that would work again because we have the Swiss market, right? There's a lot of investment bankers, etc., ultra high net worth individuals, foundations, family offices. But in between, in the scale capital, there is definitely a huge gap. Yeah, you could say a canyon. Yeah? So what is a huge challenge? The companies have to basically jump over the pond. At least they have to make it to the UK. UK, obviously, now with Brexit is not European Union anymore, so it's not as easy as it used to be. To go to the US without people on the ground, without a network on the ground, and without owning your home market is really difficult, right? So that's a big challenge. And sometimes it's a decision for founders. Do they move the full team, right, to basically work on a bigger market once they have a first proof of a product in a local market in Europe? And others, and we see more of that, try to be very cash efficient, try to generate revenues fast at very early stage, and even at early stages become profitable before rounds again and again and again, which sounds a little crazy, right? In talking about venture capital, and then you have companies at a Series A that are technically cash flow positive. So if they would turn off a growth, right, they could be. But that's a necessity because it could easily take you 9 months longer than expected to raise this growth round in Europe. And you will need to access, a Japanese investor, Abu Dhabi, or I don't know what, or a US, Canadian, to get you out there in the rest of the world. So I think this is a big challenge for us as investors. This means we need to build global networks. We need to go and connect on a global scale. Usually, I travel a lot. With the pandemic, I do Zoom a lot. Yeah, I enjoy very much to be virtually in Texas today on a podcast with you. I see basically my personal mission. I try to connect everybody in the world with what we do here in Europe and bring some great technology, some amazing founders, some amazing talent into the rest of the world. And I do also support the opposite routes. And because I think, it's a give and take play. If I know there's a friend of mine, investor in New York, invested in a great company, they already have significant traction, they want to start in Europe, I will help them to get foot on the ground, right? To connect them with the right people, to get them access to hire some good talent, and to basically start off. I think it's a give and take.
Well, great. Well, you see a lot of applications and sectors. If you had to pick one or two that you would put at the top of the list as being best opportunities to pursue today, what do you put at the top of the list?
I would personally put on top of the list, and that's maybe biased because I just looked at this today, I would put at top of the list market making for crypto. I think this is a phenomenal space. I just learned today that there is roughly 40 new tokens being issued every day. Yeah? There is so many exchanges globally now. Of course, they're the largest ones that everybody knows, but there's so many little brokers, exchanges, etc., and new ones are popping up all the time. And if you want to get your token out there, right? I mean, first of all, it shouldn't be a scam, right? But let's say you have a serious project. You need people to actually sign this, and then you want this tradable. And there's a big problem with that, because a lot of tokens are just not liquid. And if you want to get your token liquid, you will need a market maker. And this might sound easy, right? But if you look at it, there is a couple, you could say, kind of hedge fund-like prop traders that basically take an investment risk in providing liquidity to your token. And there's a very small amount of really smart liquidity providers that I would say play at standards that we are used to from developed markets, like the classical equity exchanges. I've actually found one today. Happy to share this one if somebody wants to look at it. It's a company named Floftec, FLOVTEC, from Switzerland, where I'm leading around, and I think it's phenomenal, and I think they will have a good chance to be a very, very fast unicorn.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
What else should we cover? I would say let's look across borders. Let's learn from each other. Let's exchange ideas. Feel free to reach out to me. Best way to reach out is always LinkedIn. I try to be as responsive as possible. I think there is no stupid questions. I think there is nothing that can be stupid to reach out. I always try to help, or somebody in our team. Like I said, I think it's a two-way street. And if you're kind and try to be helpful to people, then this usually comes back. In the end, I mean, we can make the world a better place through technology, through innovation, hopefully also a more healthy place, and maybe also a cleaner place, which is also something that I personally look at lately, is the whole topic of climate change, waste, etc. But to be honest, I haven't figured out what to do in this space yet, personally.
Well, very good. Well, we'll put your contact details in the show notes. I want to thank you for joining us today, and hope to have you back for a follow-up soon.
Would be my pleasure. It was great being with you, Martin. Thanks very much for the invitation, and have a great day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.